If you're an investor, you're probably frustrated with a lot of the content around NVIDIA because a lot of it is around a trading perspective. NVIDIA just had blowout earnings, but it's down because it ran up prior to earnings. And what I want to do is go through earnings in a simple way, talk about the fundamentals instead of, oh, it's undervalued, overvalued, or it's this trailing PE. Let's look at where the PE is headed and how we actually want to value stocks moving forward. I'm Bradford Ferguson with Rebellionaire.com. We help all-in investors do three things. We help them sell covered calls to generate income on their all-in, income possibly to grow shares if they want. We do trimming and adding instead of just hodling. We want to take advantage of the emotional highs and lows around your all-in investment. And we want to add some slivers of other companies to invest in. I'm going to share my screen and we're going to get into the NVIDIA earnings announcement. So this was a year ago. NVIDIA had 6 billion in earnings or 6 billion in revenue. And the profit was only 680 million or 27 cents a share. Fast forward to today, they've essentially tripled their revenue, grown their gross margin by 20% or 2,000 basis points, which is a lot. Their operating expenses has only grown by about, looks like 15% or so. But the profit is gone up exponentially, and so is the EPS. So people were saying in March that NVIDIA, or in May, that NVIDIA was overvalued because the trailing PE was like 200 something. But with any rapidly growing company, you can't look at trailing PE. And depending on how fast they're growing, you can hardly look at the forward PE. The reason why we own any investment is what the earnings are going to be like over the next 10 years. I'm talking about owning versus trading, investing versus speculating or gambling. So here are the last 4 quarters, and when you add it all up to a trailing 12 months, you get 45 billion in revenue, operating expenses of about 11 billion, profit of 19 billion, and earnings per share of $7.50 a share. This brings us down to a trailing price to earnings of 66. I saw this coming. I was tweeting about this. We want to be looking forward rather than backwards. But what we know is that NVIDIA is continuing to grow despite an absence of being able to ship much product to China. They're going to be they guided for the revenue to grow to 20 billion in the next quarter. Let's see what line this is on. But let's back up for a sec. So year-over-year revenue growth of last quarter was basically tripled. Operating expenses only grew 16%. So that's some real leverage in the business. GAAP net profits grew 1,259%. That's big time leverage. The reason I'm using GAAP is to make sure that stock-based compensation is accounted for and not pretend like stock-based compensation is a one-time item, which it's not. It's a every quarter type of item generally. So we want to be honest and conservative about that. So let's go to the next couple items. Guidance for next quarter was 20 billion, and the margin guidance was 74% gross margin. Operating expenses on a GAAP basis $3.2 billion. I project that earnings would be about um, 10 $10.40, and ending around $420 dollars per share on a diluted GAAP basis. So when you annualize that, and assume no decline in the business should actually go up and earnings should increase. They're continuing to just scale and ramp the existing capacity they have, but also NVIDIA is growing other segments of their business. The data centers where they're getting the most growth from. When you annualize this next quarter, you get earnings of $16.76 per share, or a forward PE of 30. So it's essentially your earnings versus a trailing 12 months are doubling, and you're so like the forward PE is 30, but earnings are growing like over 100%. So like the peg on this is like a 0.3 peg. It's pretty crazy. Let's see what else we got here for you. So what I did next is I looked at what might the 4 quarters after that look like to get a fiscal year projection. You know, what's happened recently is NVIDIA's blown out their guidance. So when they hit 7 billion in revenue in this quarter, they guided for the next quarter to be 11 billion. And instead of doing 11, they did 13 and a half. And then they guided, I think this quarter they guided maybe for 16 or less billion in revenue, and they did 18.12. So guidance is 20. Maybe the CFO is going to be accurate this time, but they've been way too low. So my guess for and this is for next quarter. So these quarters are the quarters after that, and basically represent the next fiscal year. Just playing around, I'm looking at 22 billion to 28 billion over those next quarters. So you're ending up with 100 billion in revenue, profit after tax, maybe being all the way up to $60 billion, and earnings per share of $24 per share. So that would represent a 21 forward PE. Granted that that's a little more than a year out to get there, but it's a year and a quarter. But you got a forward PE of 21. Just amazing earnings growth. Generative AI, which NVIDIA is powering, and everyone's paying up to buy the product. It's not going away despite the drama around OpenAI and them firing and rehiring Sam Altman and Greg Brockman. Microsoft's working closely with NVIDIA to design chips to help them out. But then after that year, after this next year, where you have $24 potentially in earnings per share, they're working with Taiwan Semi to double their chip on wafer on substrate supply. So that's COWOS is the acronym the nerds have given it. So it's possible the earnings could even double from there again. And people are wondering where NVIDIA could go long term. And certainly the risk with the share price is that Wall Street and others are going to constantly be assuming that we've hit some kind of top of the cycle. But there's a underlying shift that's happening. And Jensen Wong, the CEO of NVIDIA, outlined this in a podcast. And I wish I could remember the name of it, but he's talking about accelerated compute, which has been NVIDIA's focus over the last 20 years. And that in the data center, there's all these tasks now that greatly benefit from accelerated compute. And when you can parallelize the computation for a lot of what's needed for AI, you can 10x your performance per watt. Performance per watt is very key. And you can't do the language learning models, the large language models. You can't do them with a CPU. You need accelerated compute that comes from GPU or from these AI compute chips. And this is what NVIDIA does. Putting this into context, I want to show you about, I showed the year-over-year growth. And when you're investing in any company, you're looking for growth. So, Microsoft is doing well. Their latest quarter, their revenue grew by 13%, and this is year over year. So this is not versus the last quarter. Their net income grew 27%. You stack the revenue growth up against NVIDIA. NVIDIA, their revenue growth was up 200%. Their GAAP net income was up over 1,200%. So you have to be careful about this as a long-term investor. If you want to gamble, you can do that. You can play the swings in how people play earnings. You can do that. Let's look at Apple. Apple, they're not showing the year-on-year growth on their earnings. They don't give out the percentages because they're not growing anymore. Apple's latest quarter, their revenue, they're just not growing like they used to. Their revenue was flat. So their hardware revenue went down by more than $3 billion. And their services revenue went up by a little more than $3 billion. So they were pretty much flat. But their earnings went up about 15%. So that's the net income. Apple's been buying a lot of their shares back. That's been really the big story, is kind of somewhat coinciding with Steve Jobs dying. Their growth has really slowed down. So when you look at, what are you paying for $1 in earnings with Apple? You have a price to earnings of 31, a forward price to earnings of 27. But Wall Street, they're projecting Apple's earnings to grow about 6% over the next 5 years, 9% over the next year. So like you're paying 31 price to earnings for 9% earnings growth. In comparison to NVIDIA, that's not good. That's not what you want. Yeah, I just wanted to show you this event that Microsoft just had, Microsoft Ignite 2023. I'd highly recommend watching a supercut of that. They're talking about hardware they're collaborating with NVIDIA on. Pretty interesting. So NVIDIA helped them design some hardware. So they're working very close together. And this is a partnership that's not going to go away. Um, NVIDIA has a monopoly. Everyone's needing to buy from them. This will change over time, but AMD has been slow to the party. Uh, they had a stage show where essentially their CTO admitted that they were starting their AI division. NVIDIA started their AI division at least 3.5 years ago, if not longer. They've been at it for a much longer time. So they've been supporting AI workloads in a much bigger way that way. AMD is just starting their team. So I wouldn't expect it to go totally smooth. Um, and NVIDIA has a much bigger lead as far as their software. They have millions of developers that are working on CUDA, which is their language. And certainly there is other competition. There's Cerebras, that's um, a private company. They make like a it's kind of almost has to be like a perfect a wafer though. So they make a wafer where it all works together and it's like on one wafer that's cut that way at the factory, where it's not like all put on one wafer like Tesla might be doing. With Dojo, it's cut out of one wafer. So like Cerebras, they need a perfect wafer, and that's very hard to get. I think they have a cost issue. I think that's why we're not hearing more from Cerebras. We'll see. Um, in AMD, they're coming on. Um, but where compute is going is, like I was starting to say, is um, you have the data center, it's dominated by CPU compute, and this is called, general purpose. The CPU is kind of like the traffic cop that can direct the compute, but it can also do a much bigger variety of computation. But then you can parallelize the compute with what NVIDIA is doing with accelerated. So where the data center is going from is from maybe around 5% today of installed capacity being accelerated compute and going to at least 50%. This is what Jensen Wong thinks. So in order for that to happen, um, the revenue of accelerated compute in a data center needs to be over 50% for a number of years. NVIDIA got some pushback on the analyst call where a Wall Street analyst is just really struggling to deal with this cosmic change that's happening. And he says, well, NVIDIA is going to be 30% of the revenue of data center hardware sales next year. Can you grow on top of that? And Jensen said yes. So it needs to be above 50% for a number of years just to have this change happen. I believe it's happening. Um, certainly with any exponential change, it's not going to be a smooth, straight line. People are going to, trade it along the way. But I think there's an opportunity here. I'm Bradford Ferguson. I'm with rebellionaire.com. Again, we help all in people do those things I mentioned earlier. Rebellionaire.com is a brand of Halter Ferguson Financial. I am a financial advisor. Our clients do own NVIDIA stock, and as of November 22nd, 2023, and we stand to materially benefit from an increase in the share price. I'm not concerned with the decline today. There was a bit of a run up going into earnings, but as I showed you, some things about the valuation. So people will come out and say that NVIDIA is expensive, especially the people on CNBS and So now you know otherwise. Anyhow, hope you have a great rest of your day, and bye for now.